mines. We don't actually operate mines, and what we do is we buy the rights to precious metals byproduct production, and we pay a large upfront payment, and then the gold and silver is delivered to us for a fixed cost. So it provides capital to mining companies, and it provides shareholders an opportunity to invest into gold and silver for fixed prices with no cost risk. So
how does that work if the market is fluctuating price-wise?
Well, obviously, when we buy low and ride that up, we do very well. We started the company back in 2004 when silver was trading at around $4 or $5 an ounce, and so it's been very good for us. We try and focus on buying at the bottom of the market.
Because just recently, I mean, you announced profits, and there was a profit drop of around 36% because of this decline that we've seen in silver prices.
Exactly. We are directly connected to the commodity price. When silver drops, we drop. When silver climbs, we climb. We also have a bit of gold in our portfolio now, so it has diversified a little bit, but we're seeing gold, of course, under pressure too.
What are the catalysts for the market, do you think, next year? I mean, what's going to drive prices?
Well, you know, my forecast over the next year is probably neutral over the near term here. There does seem to be a belief that there's strength in fiat currencies in the U.S. dollar itself. I just don't see the fundamentals behind it. I look at the economy; it's not doing as strong. I think people want to believe that it's doing well, but when you look at the technical side, I just don't see any changes in fiscal policy that provide that strength. And so it's eventually going to catch up, and we're going to see real value assets like gold and silver play a more important role.
I'm just wondering how that fits with demand and how that fits with kind of, you know, global economic outlook, where there was a time when we were, some would say, driven by commodity prices, and then a number of years back, and then that kind of shifted. Then we were driven by China, then we were driven by the U.S., then we were driven by the financial crisis. I'm just wondering, I mean, what happens if we continue to see weakness with demand for silver, for an example?
Well, I mean, it allows us as a company to continue growing, because these are the times, the bottoms are the times that we try and grow our company and look for other opportunities to invest and set ourselves up, particularly. And so it gives us, as Silver Wheaton, the opportunity to make further investments into the space itself and prepare ourselves for that time when we see that demand pick up and we see prices go.
And how much of a correlation is there between silver and gold movements at the moment?
Silver is definitely more volatile than gold. There's no doubt about that. But at the same time, if you're buying in the bottom, that does mean that silver should outperform. There are some fundamentals about silver that we like. We also like gold. We like precious metals as a whole, but silver is consumed. Half of silver is consumed, and it's in places that are increasing in demand. So we are pretty bullish on silver.
And where's the majority of your business done?
Most of our assets are in the Americas, really. Mexico and Peru are very, very important to us. Those two countries produce the bulk. They're the two largest silver producers in the world. But we have 5 contracts here in Europe also.